Hello and welcome to another episode of Market Maker Mondays. I'm the Nomadic Trader, and as always, we're going to do a review of last week's price action on the S&P 500. We'll also have a little look at the dollar index. We'll see where we currently are. But this week, I'm actually going to do things slightly different. So what I want you to do is I want you to pause the video at this moment in time and draw on these key levels here. So we've actually got this bullish order block, which is the entire candle. We've got the high to the low, and then we've also got the mean threshold. Draw that out in time. Then we've also got another area in price. So the price level for the opening on this down candle is also an area of sensitivity. I want you to draw that out ahead of time, please, to Friday, the 10th of March's candle. Then we have this BISI here, which is a bullish fair value gap, which is from the high of this candle to the low of this candle, and draw that out in time. And then finally, a premium PD array. We've actually got this daily SIBI here, which is the fair value gap of the imbalance from the low of this candle to the high of this candle. And then we can actually see that at the moment, that would actually put us up here, but we do come lower, which extends the range down. So as always, we are looking to trade the market on the lower time frames using the daily draw on liquidity from a premium to a discount and from a discount to a premium. So we always want to have a premium PD array highlighted, and we want discount PD arrays highlighted, and then we trade on the lower time frames between those points. But as I've suggested, I'm going to do this one slightly different. So please have these key levels marked on. Pause the video now if you need to, get those drawn in, and then come back to me once you've got them drawn in. Okay, so hopefully you've actually drawn these on and you are going to participate in this little exercise. Last week was exceptionally good for me. I just felt that I was really in tune with the narrative and the draw on liquidity as well. And what I actually did is, little over 10 days ago, I was actually off. So if you remember, if you watched the previous video, I'd got a cough and I'd actually got COVID. So I wasn't feeling great. Well, I ended up having 2 weeks off work. And I thought, well, whilst I'm at home and I've actually got that time, although I wasn't feeling great, what I wanted to do is I want to have a practice to get funded with FTMO. So for the British pound maximum single allocation, it's £140,000 account for funding on the initial go. So I set up a paper trading account and I replicated the conditions of that £140,000 challenge. And it was at the time when ICT suggested as homework, we set up an £150,000 account, and then we draw down £3,000, and then we worked to recover that by the end of the week. So I actually started with a £140,000 paper trading account. I treated it like an FTMO evaluation account. But what I actually did is I actually reset the paper trading account to 137. And I'm pleased to share that within 10 days, my profit target was to take it from 140 and grow the account by 10%, which is £14,000. Well, in 10 days, I actually grew the account by £30,000. So it's a huge milestone in my trading career. If you're new to my channel, I have now been trading for 8 years, but I've only really been learning and trading the concepts from ICT for the last year and a half. So I'll show you the results. So on the 7th of March in the afternoon, I reset the account to 137, and then I had a big heavy hitter to basically just recover the account from 137. By the end of the week. So I had it was actually 2,000 shares, or it would have been 2,000 lots. So a really heavy-handed one. I had nothing to lose at this point. Obviously, I'd only just started it, but the goal was for the homework to recover the drawdown. And I did that, and then I started to trade the account as I would trade an evaluation account, and then I ended up 10 days later on 167 and 26 pounds 90 pence. So it's great news for me because I know it's actually the second time I've been able to do this. So I know that I am actually now ready to apply for funding. I do work full time still, but my plan, in brief summary, is I'm currently viewing project houses that require redevelopment and to actually have them as buy-to-lets, and that's actually going to replace my income in order to free up my time during the day so then I could do my trading. But without further ado, going back to the purpose of the video, we've got these key levels here, and I'm just going to walk you through now day by day. So Monday's trading, we had a large indecision day. We actually left the high intact here. We took out the previous week's low. We traded lower into the mean threshold of this, and then we actually saw a reversal. And you can see where the body of the candle actually respected, which was within this BISI here. Moving forward again, we've actually had the manipulation. So we'd have had the consolidation here on the lower time frames, manipulation, which is the power of 3, and then we've traded back up and we've closed near the highs. And you can't really tell on here, but I'll show you on the lower time frames. This is actually a higher high than this one on the 1 hour time frame, but we are yet to enter into this imbalance. We've had another wick down. We've actually traded lower right into the mean threshold of this bullish order block, almost to the pip, which is absolutely perfect. And then we've rejected. Now this is actually holding price above this imbalance range. Excuse me. And then you can see that we've almost entirely on Thursday come back in to close this range here. And then Friday's trading, we've completely closed in the range. And I had successful trades on Friday as well, because what I was anticipating is because we were now back into a premium, so dealing range high to low, back into a premium, completely closed in this imbalance. We've got the previous daily high. People are going to be expecting this for a continuation. And then I wanted to just basically just fade that back down again to lower time frame structure. But this would have actually been the PD array that would have been looking for, and then the mean threshold of the body of the candle there. So that's that back in time. And then if we go down to the 4 hour time frame, you can see just how beautiful the price action was. And I know a lot of people in the Discord group, they couldn't get their head around it. But basically, we've got this original consolidation here. We've got the imbalance. We've pushed up higher. We've traded up to a premium here. We've taken the buy side liquidity. We've got a smart money reversal. And now the 4 hour and the 1 hour time frame was coming back down again. So here we have, this is a higher high to this. So effectively, this in terms of market structure, this is your high, low, high, low, lower low, lower high still, lower low. So this is still bearish here. So we've actually taken the sell side liquidity here. We've moved into this discount PD array, and then this here is actually a higher high, but it's failed to move into the daily imbalance here. So these are accurate. So this is higher than this, and then this is higher than this, but it doesn't actually come in to close that range. So when we were actually trading back down here on Wednesday, I still had the confidence that price wanted to move up. So this was actually my hourly dealing range. So the significance of this now is we are at a deep discount on the daily time frame dealing range here. We've had confirmation that this is now bullish again. Okay, so this high in simple terms is higher than this one. And then what we've actually done is this here is just a complex pullback. And then we've come back into consolidation, and you can see how we are respecting the levels here. So the BISI, or the fair value gap, you always want to keep that on your chart when price is trading in and around that key level, especially on the daily and the 4 hour and the 1 hour time frame. It's absolutely essential for navigating where price is. So we actually pushed down lower. We had these relative equal lows here, traded lower, and then we've had a smart money reversal, shifted market structure, and then we've moved higher. And then here we are in price, and then this now might look a little bit cluttered. But if I walk you through price, so this is the pre-market open high, what we've done. So this is Sunday. So what we've actually done, so this would have actually been the high of the previous daily candle, because I've actually got this set to New York. It actually works out differently. So what we've done is we've actually taken the previous daily high. So we've taken Friday's high, then we've reversed. We pushed all the way down to this discount, and on the 15-minute time frame, we've got this rejection block here. So we've got a shifted market structure, we've got this imbalance, we've got a trade set up just after the 9:30 open. So the 9:30 open has actually pushed down. And what I've really been using on the lower time frames, the 1 hour and 15-minute time frame, is this here. So if I see a key level get rejected with a wick like this, and then we have a short-term rally, when I see price pushing back down again, you need to think in terms of the psychology. What this is doing is this is actually now having seller failure, because people are going to see this as a lower high, and they're going to anticipate a lower low because of all of this downward pressure. However, the smart money trader, the informed trader, can see that we've actually rejected this key level here almost to the pip, and then we've traded higher. And what we've done is we've actually come back down to mitigate the 50% mark. And you look at the respect that we get on this key level here. And then we've pushed up higher. We've had that shifted market structure. So this here would have actually been an aggressive entry. I'll be honest, countless times I'm trying to catch a higher low in examples like this, and I'm losing 1 or 2 or sometimes even 3 trades before we actually get that move. Pretty much every single trade that I've had that I've showed you in brief there has actually started that way. I haven't actually worked out what my profit factor is in terms of my win percentage, but it's average, but with good money management and actually perseverance and experience, obviously knowing when the move is finally unfolding. So anyway, so we've got this rejection block, we've got a shifting market structure, and then we've started to trade higher into lunch. We've actually taken out the lunch lows, traded higher, and then we've come back down. We've got the last hour macro trading here. So the way that I have this divided here is, this is New York midnight time, this is 8:30 news embargo lift, this is 9:30 equities open, this is lunch 12 to 1, and then this is the final hour macro between 3 and 4 p.m. and then 4:30 is the end of the liquidity. So that's Monday's trading. Tuesday, we've had a grab on the sell side liquidity here, shifting market structure, moving to the upside. We've pushed up higher into the 8:30 open. News has taken the sell side liquidity again, but you look where this is in price, this fair value gap, mean threshold, we are above the 50% mark here again. We've traded higher, and we've actually taken the previous daily high just there. So that's now given us, again, that bullish narrative. This is now going to be your protected low, because this is now your 1 hour dealing range. So when you look at this on the 1 hour time frame, it's absolutely essential for day traders to have your 1 hour time frame nested within that daily draw on liquidity. So what I mean by that is if you are trading short, you need the confirmation that we are actually in fact creating a swing high in the marketplace. So you're looking for a 1 hour PDRA grab on liquidity, whether that be fair value gaps or old highs or old lows, and then we've actually failed to breach this high here, but we've taken the liquidity from these relative equal highs. We've created that swing high, and then we've actually got the confirmation here. So the way that you're trading that is, this is your internal range liquidity here, and then you're trading the run or the pullback on the 1 hour time frame. And that is absolutely essential, because I think a lot of people that I see in the forums and on Discord in our group, what they're doing is they're completely ignoring the 4 hour and the 1 hour time frame. You need to be trading, as I mentioned, the daily run is a 1 hour trend. Yeah, the 1 hour run, obviously this here from here to here is is a 1 hour run. This is a 5 minute and a 1 minute trend. Okay, and that there in itself will make the difference between profitable and unprofitable trading. So we've now got this confirmed dealing range because this high is higher than this high. We've completely rebalanced all of this, and then we've had another good trade back up to the highs here, and you can see that we've actually just fallen right to the close of the body of these candles. And then when we've actually come back down again, we've taken out all the weak hands here, and then we've had another smart money reversal here. We've had a push up higher, and then again off to the races, and we've completely closed in that range. So in summary, last week's price action was absolutely stunning. You've just got to make sure that you are paying close attention to the correct important key levels. So my key levels were not like this on Sunday. I had new week opening gaps down here, but when I could see how price was reacting to this area of confluence here, that then gave me conviction to go down to the lower time frames and observe and let price tell you what it wants to do. So it's okay suggesting that an order block should do this, or a fair value gap shouldn't do that. And I've had a few questions about whether or not like this was already mitigated because it had come into it here. So this is actually an institutional order flow entry drill here and here. But when the bodies of the candles look like this, like how can you ignore that? Like regardless of what the rules say it should or it shouldn't do, you need to start trusting your own analysis. If price is holding at key levels, it's a key level. And then you would obviously use that with time of day. And like I said, crucial, the 1 hour run. This would have probably given you a 10-hour trade on a 5 minute or a 1 minute time frame. Personally, I don't really trade the 1 minute too much. I only really like to go down to the 3 minute time frame. I think it gives you a lot of information, but it also filters out a little bit of the noise. So here we've actually got 1, 2, 3 pushes higher, and we actually fell short of this key level, but that's because the mean threshold of this daily key level has capped price. So you might have actually got chopped around a little bit here, like you might have taken 2 losses, and you know what, that's fine. What you need to do is you need to let the market then tell you what's happening. And if we failed 3 times to push above this And you can see that the 1 hour time frame is showing you that swing high formation at this key level, and you're starting to put in imbalance here. You've got imbalance in price here, which is actually capped price, as well as this fair value gap. We've also got this imbalance in price here as well. It's about the narrative. It's telling yourself the story. What does price look like? Where is the imbalance? And also a key point for me, a key turning point in my my success with the ICT concepts is the role reversal. So where we're ebbing and flowing here, price was unable to stay below this level, and this was the draw on liquidity because we'd taken the sell side here. And this is in fact a retail inverted head and shoulders, where you've got the left shoulder, the right shoulder, and the head. But what it actually is, as ICT teaches in his 2022 mentorship program, is this is advanced market structure. So where we've got this confirmation of the dealing range high, and then it's just for entertainment purposes, have a look to see what that looks like as an OTE. Do you know what I mean? It's just unfathomable, like the accuracy. It's long, like hopefully like this has been insightful to you. I don't want to keep going on a rant. I've covered a lot of that now in detail. So what I'm going to do is take you back to this. Excuse me. So weekly time frame. Also, another thing to note is Tuesday, Wednesday, Thursday, I'm always going back up to the weekly time frame to see where the high of the week has been, to see where the low of the week has been, to see if there's potential for us to keep expanding one way or another. And when we'd actually taken the previous weekly low, we'd respected all these levels and we were pushing back higher. That's what gave me the confidence to not trade this any higher than this bearish order block, because this is your premium weekly PDRA. So if you are taking a trade on a 5 or a 15-minute time frame, you're not expecting to trade through a weekly order block. Write that one down as well, because that's a key message. So if we zoom out on the weekly time frame, this does look like a bottoming pattern, and it looks like we could actually be pushing higher. In the near term though, we have this larger dealing range here. So we've reached a premium, we've taken the buy side liquidity here, and then we've started to trade lower. We've traded through this bearish order block. We've traded through, this bullish order block. We've traded through that now. This should have capped price if this institutional order flow was to continue to the upside. However, we have stalled here. I think the drawn liquidity remains to be here. So this is your sell side liquidity. This is going to be internal range sell side liquidity. But then ultimately, if we take out this level here, I don't see why not that we can't come down to this. So this would be your sell side liquidity here. And then we've actually got this. So this mean threshold here needs to hold price. If we trade above the 50% mark of this bearish order block, then this then could potentially reverse to the upside. And then this is the buy side liquidity here that we will be targeting. So we've actually had an indecision candle here. We've traded, we've closed back in this range here. If this is to go to the downside, Monday into Tuesday, we could actually see this push higher and then trade 50% of this wick here. So we could have the 50% of this here. We can also have the 50% of this wick here, because those will be areas of interest. But I think what's important is at the moment we've got this low high, higher low, higher high, higher low. So potentially we could actually push higher to come in and close this imbalance here in price. So if we have that drawn out there, obviously if price is starting to show on the 1 hour and the 4 hour time frame that we are supporting price and we're moving higher, institutional order flow is going to remain bullish. However, if we start the week and the PD arrays on the 1 hour and the 4 hour time frame aren't supporting price, they are actually resisting price, then that will actually give us conviction to trade this to the downside. I do think that we need a little bit more information in order to have a strong conviction, because we have these dealing ranges here. So this is the daily dealing range here. So we're actually back down into a discount here. And we're actually traded above this bullish order block. So at the moment we are between this PD array and this PD array. So I want to see if this area continues to hold, and if we do so, then we want to see this traded through and to come in and close this imbalance here. And then above that we've got this buy side liquidity on the daily time frame, and then we've got this imbalance here. So just pop those on. So we have all of that imbalance. So the PD arrays are basically resistance up here, the PD arrays down here are support, and we are looking at trading the 1 hour and the 4 hour institutional order flow. Once the 1 hour is bullish, I'm only looking for buy signals on the 5-minute time frame, the 15-minute time frame, with that momentum, the draw on liquidity on the daily time frame, and then vice versa. I'm not looking at trading against the 1 hour time frame. If the 1 hour is bullish and the draw on liquidity is bearish, I won't be looking to hold positions through higher time frame PD arrays from a 5-minute entry, for example, because it's absolutely murder. I think that's probably everything in summary, really. If you've got any feedback or any questions at all, please leave me some feedback in the comments below. If you wanted to take a snapshot of that, what I will do is I'll actually upload this as well. So I'll save this chart and I'll share this. As always, thank you very much for clicking on the video. If you've made it through to the end, I really appreciate that. And yeah, please show me some support, like and share the video and all of that great stuff. Okay, thank you. Speak to you soon.